Welcome everybody to an episode of Trident Talks. I'm Josh, the director here at Trident, and today I'm glad to be joined by Ricky, who is the one of the founders of Cyberspatial. Ricky, thank you for joining.
Hey, nice to have. Thanks for having me on.
You're very welcome. Thank you for joining. Obviously from across the pond, if people haven't gathered from the accent. Ricky, it's kind of my turn to interview you now. I know you're very kind to have me on your show a couple of weeks ago. Ricky, during July, we're going to be launching a series. It's kind of like mini series or mini videos with kind of founders of cybersecurity businesses and vendors who have recently or have in the past taken investment. We want to kind of bring it to the forefront of the community for people to understand what does it actually take, and just kind of get into the nitty gritty, but kind of like not quite quick fire, but we'll get there. So Ricky, kind of like for people and some of our viewers and listeners, what do you guys do? Firstly, let's just quickly break that down. What is Cyberspatial?
Yeah, so we're a cybersecurity software company. We're building a cloud-based subscription platform. It helps turn your cybersecurity data into security footage so you can watch what's happening just like a video. The big problem that a lot of practitioners face is we can't see the networks that we try to protect. And that's kind of what we're solving, making cyberspace easy for people to see.
Awesome. So talk to us then about the investment behind that, right? Because it's not cheap to build a software company. So where are you at? Kind of like, have you taken investment yet?
Yeah, so we did like a 900K angel round
Nice.
with kind of two angel investors that we knew very well. My co-founder and I, we were very heavy on both the sales and marketing side, and we needed engineers to build the product that we wanted to sell. So we needed capital to be able to hire them, and we had some of them kind of working at risk, just the first two for a few months before we secured, enough money to bring them on full time. And the converse is actually true if you're an engineering heavy founding team and need to
Yeah.
hire technical sales and marketing execs to be able to communicate your product to customers and maybe investors.
Yeah, absolutely. So from kind of like conception of the product idea, so you and your co-founder kind of like at what point did you guys then go, oh, we need investment, otherwise we can't make this work because engineers are expensive, right?
Yeah, I mean, I think it was basically the ideation. It's been in the works for a number of years, and during that period of time, we're like, yeah, we need to go find some money. At the time, we were still transitioning out of the military, so we didn't really know what the whole business world was all about. It
Yeah.
was, how you get budget out of the government is very different than how you get money from thin air. So that was kind of a transition for us.
Oh yeah, and I suppose I should have said congratulations, by the way. Securing that amount of angel funding is insane, and straight from the military. Like in the UK, it's not really a done thing. It's normally like you have to go into the industry, do your time served, and kind of find your feet and stuff. But you guys come out, had the great idea, smashed it, and went, we go straight to two angel investors, and we're going for it.
Yeah, well, we're actually raising a 2 million seed round right now
Wow.
so we built a MVP and we're launching a
Yep.
public beta to be able to go, um, hopefully be able to be cash flow positive in the
Awesome.
next 12 to 14 months.
Amazing. So tell us about that then. So kind of like we know what you're doing with the initial angel funding. What's the plan with this extra 2 million? Is it Series A? Did you say it would
This
be
would be a seed round
seed?
actually.
Sorry, seed. What's the plan with that 2 million? What?
Yeah, I mean, so it's basically to hire additional engineers to be able to support more features and to, we're looking at filing some software patents, supporting maybe being able to take a real salary. Still not a real salary, but
Yeah, but yeah, pay the
cover a lot of
bills.
them. Yeah, cover a lot of the marketing and admin costs and stuff. But it was nice about being a software company and being remote with no lease or
Yeah,
property
yeah.
is all of it just goes straight to engineering.
Yeah, super agile, right? So seed fund, so angel funding, just so I'm clear, and just for the listeners, is you find basically some kind of like rich individuals that have a real good interest, and obviously more to it. What's the difference between that and seed then, other than the maturity of your business and obviously more money?
Yeah, typically at the angel round, people are starting with just an idea and they're looking to see if you can just turn it into a product. And
Okay.
then that seed round is being able to validate your product market fit to see, hey, do people even want to buy the stuff that you built? And that's kind of the difference there. If you've already, let's say you're a technical founder, you already have a product that you're built, you could probably skip the angel round and just, or ideally, you should just start selling it, honestly. Like skip the
Yeah.
whole raising, right? You start selling, get some revenue, and then when you raise, you're much more attractive, you get much better terms because you have real sales.
Yeah, absolutely. And then, is there a set percentage, like a rule of thumb, that you have to give away at each round, or is it just completely your? I know, again, I'm not going into confidential kind of numbers and stuff, but is there a fixed percentage that people normally give away at each round, or is it just dependent on?
Yeah, you'll often see people throw around the 20% number
Okay, cool.
dilution at each round. So let's say you start out, if you're a solo founder, right, you start off at, well, actually, it's not as straightforward as calculate percentages. You're actually just calculating the number of shares are issued, how many shares you
Yeah.
have of that. And it's like you grow the denominator, basically. And so the entrepreneurs are typically looking to sell maybe 10 to 15% of the company for a certain price, and investors are usually want to take 25 to 30. So it can range wildly depending on how strong of a company you are and how savvy you are at creating a market for your shares. Because at the end of the day, instead of selling a product when you are raising, you're basically selling your company. And people are looking to buy into a profitable business that makes sense. And so if it's more risky, they're going to want more control and want to be compensated for that risk. So they're going to get a better deal. And if it's buying into a really fantastic company, you can price your shares much higher. So a general rule of thumb, anywhere between like maybe 3 to 6 times the amount you're raising. So it's like you're raising, say 1 million, uh, your pre-money valuation would be a multiple of that to get those percentages. So if you're raising, let's say, $1 million on a 3 million pre-money valuation, right? So 1 plus 3 is 4.
Mhm.
So you get about 25%, or you're
Yeah.
selling about 25%.
Okay, awesome. So you've created your minimum viable product, the MVP. Everyone does that from the angel. You then go to seed and go, hey, here's my MVP. It's now a concept. If you've sold your product, great, even better. You've got something tangible to X. If you haven't, how do you? Is it now you pitching in front of more like, is it venture capital? Is it private equity? Is it high net worth individuals? Is it a combination? And then you're just sitting there kind of like going through your pitch deck and grinding it out for like as long as it takes.
Yeah, I mean, kind of putting the recruiter aspect of it, you can, blast out emails and start grinding through and doing working the numbers game, or you could start using your weak links and doing warm intros and tapping into that to be able to uh, eh, meet people who are investors who are interested. And the range can span wildly from, again, from family offices to VCs, and the nature of those investors. Are very different because people who are like an individual independent investor, uh, they might have different goals than a VC would. A VC is
Sure.
responsible for other people's money,
Yeah.
and so they're going to have want much more control and have a much more rigorous due diligence. Whereas if it's, let's say it's another entrepreneur that is already successful and he's on his farm somewhere and he knows you and he wants to just kind of help you out, it's a very different relationship. But at the end of the day, investors have what they really want is to generate high ROI
Yeah.
on their money. It's not to make you rich. Your job is to make them rich.
Yeah, yeah, good point. Do you have any like, I suppose, concerns? Is there anything like during that process, and like when you're trying to identify, like, touch wood, right? You have like fewer different offers, and people are coming at you with kind of like a VC, a PE, maybe a family office. Do you have concerns, generally speaking, about taking investment, other than the obvious, which is I don't want to give any of my baby away?
Yeah, I mean, this business like attracts some of the most talented and smartest people out there. Not saying I'm one of them, but some people are just awesome and amazing, and they're really grow the pie mentality, and they want to see you succeed because you're like-minded and are aligned. Maybe it's like your investors were also ex-Marines or come from a military background who
Yeah,
then they themselves are now investors, and there's a camaraderie level to it. But this, it also attracts sharks, right? People who are really smart, and they are going to use their intelligence and their experience to extract the maximum possible value from you. And so oftentimes people don't understand what they're doing when they are raising money. They think, oh, I'm just going to go raise money. I got all this money and we're going to, make it big. And it's one, taking somebody else's money, it's a sacrosanct responsibility, right?
Yeah,
You have
yeah,
to respect that capital. And, there's people who don't understand that piece. And then on the other side, there's people who, like they're going to slave away and be completely bound. And you're basically like working for this investor now, and that could not be really good for the business, because at the end of the day, a lot of these investors, most of them are not entrepreneurs themselves, and even if they are, they don't experience what you're experiencing. They had their own business, right? They're not going to experience like what you're going through. And a lot of I'm not going to diss on VCs, but a lot of people come from MBA backgrounds. They don't come they're very much higher level. They haven't been real operators before. They're going to bring a different perspective to the table, but at the end of the day, they're not you going through the experience. So taking all of these different forms of advice is really valuable, but you're the one that's actually executing. And so
mm,
understanding that is really important. And another good rule of thumb is, if you assume that people are going to act in their own best interests, that's probably what they're going to do.
yeah.
So everyone you deal with.
Yeah, some really good advice there as well. And like, it's interesting when you say about someone else's money. It's a really like, so a lot of people have that mindset of, well, it's not mine, so it's just kind of like monopoly money, right? I can just get to spend it, and it's very easy to spend someone else's money. But also it comes with that like huge responsibility. Where I speak to business owners who have taken funding, some like within the last couple of weeks, that kind of go, holy shit, I've now got all of these millions. What if I don't give them a return? And I even had a conversation with one recently who said, like, surely, like, they should put me in prison if I take tens of millions of funding and I don't give them a return. Like, it's just a different world, especially when we're all, a majority are from the military, and it's like I've never been had that responsibility of physical, like, that much money.
Yeah, I would say more valuable in money is probably reputation, right? Money,
Yeah,
you
how
can
about, yeah, of
always
course, yeah, yeah,
earn it and convert it via time, but reputation is very non-linear,
mm,
and you could spend a lot of time building it up, and you can lose it very easily.
yeah,
And what you do, and be able to how you interact with investors, your current ones now, it's going to have a huge influence on maybe future investors and stuff. And so even if you're being squeezed or you're in a tight position, kind of really have to be a good guy and do the right thing.
yeah. Yeah, absolutely. The final question. Do you believe there's such thing as cyber vendors and software vendors being over-invested, having taken too much money?
Yeah, there's like two different philosophies out there. One is you get as much as you can get, and the other one is you get just as much as you need. So we
Okay.
definitely started off on like a blade running budget, right on the edge of life and death, which that forced us to be very focused and disciplined. But looking back, I think having some dry powder and excess capacity is definitely very helpful. So basically a little bit more than what you need to
Yep.
buffer you for the 3 to 6 month transition between rounds of fundraising. And I guess the problem is when people raise too much money without a clear plan and execution path on how to use the funds in the most impactful way. That's when it starts, going to the kombucha nitro brew on tap, and right, like
Yeah.
things are
Yeah. Yeah. Of
frivolous,
course.
and
Yeah.
it's just a misallocation of capital.
Yeah, totally, totally. So, for those that are watching, are you and can get in touch with you? You're currently hiring for software engineers now to help build. Are you still
Yeah,
reach out to you?
we're hiring for cloud engineers,
Cool.
web developers, and back end engineers. We're always interested in meeting awesome talent. And best way you can get in touch with me, you can hit us up on LinkedIn. Hit me up on LinkedIn. We also have a YouTube channel producing cybersecurity content called Cyberspatial. check me out
which
there.
by the way has like crazy amount of subscribers, like a cyber celebrity on YouTube. You would never admit that, I know. I'll put a link into this post as well, into your LinkedIn page, and the company page and yourself, so that people can reach out that are listening and watching. Cool. Well, look, thank you so much for coming onto the podcast and for joining us and answering all of my questions. It's really interesting, and hopefully people that are watching and listening to kind of get an insight into kind of like what life is like as a founder, kind of on the grind and just kind of going at it. So I appreciate you kind of sharing those insights. Good luck with the seed funding.
Yeah. Thanks for having me on.
Yeah, it'd be awesome. Good luck. Awesome. Thank you, Ricky.
All right.
Take care.